So, Owens, with us then, a quiet day on the Asian markets because of Chinese New Year, actually. But what a rebound for Olympus.
Yeah, absolutely, Stuart. Most of them closed, just the Nikkei trading closing just marginally down around just a fraction of a percentage point. Don't read too much into that. As Stuart says, most of the markets are closed from Shanghai to Hong Kong to Seoul. Just the ASX and the Nikkei traders at their desks today. If you kept the faith with Olympus through, it's fair to say, its worst period during its entire history, then you've had a good day. Its shares rebounding around 10%. This was the first day's trade for Olympus since financial officials in Japan announced that they would not delist this company for that fraud dating back some 20 years, the false accounting cover-up of nearly $2 billion. It has been fined nearly $130,000, but it appears now that Olympus is putting the worst of that scandal behind it. If you look at the share price, which has nearly tripled since hitting an all-time low just before Christmas. So good day for Olympus. It will have to now submit annual reports, which is part of the problem that got it into this trouble in the first place.
OK, well, another long weekend, a very long weekend of talks in Greece has ended with nothing concrete on a crucial refinancing deal. Private investors being asked to write off more than half of their investments to help bring the government's unsustainable debt down. Our correspondent Natalie Savarakis joins us now from the Greek capital. Natalie, just bring us up to speed, first of all, with the latest on the talks.
Well, all the elements seem to be in place for the deal. Charles Dallara, who's the head of the lobby group who's negotiating for the private creditors, said in an interview that he was confident that the maximum offer that they could offer was now on the table, and that now it is up to very much to the EU and to Greece and the IMF to accept their offer, that they cannot go any lower than this, or else they would suffer great losses, and it would not be a voluntary debt swap. And now it's really all eyes on the Eurogroup to see what emerges from there and if they will accept this deal. Now, the deal is around the interest rate. That was a big point of contention. The private creditors were pushing for an interest rate around 4% for the new bonds, whereas Germany, the IMF, and especially Greece wanted it at a lower coupon.
Natalie, it's Owen here. You just touched upon that, the whole concept of this voluntary bond swap. And there's a big area of law on this. It's always been in the background, but there are growing concerns about the legality of all of this, about where these bonds, which jurisdiction these bonds fall into. Can you give us a bit more on that?
Yes, well, that was an idea that has been floating around by especially Prime Minister Lucas Papadimos, the Greek Prime Minister, by using what is called collective clause agreements, because the existing Greek bonds, the existing bonds that are held by private creditors are under Greek jurisdiction. And now Lucas Papadimos had warned that if there wasn't a high enough participation rate in this voluntary debt exchange, he would use these collective clause agreements in order to force everyone holding these bonds to participate, in order to have 100% participation and then actually be able to secure the second bailout, because of course all participation is key on having this second bailout. However, of course, questions are raised, because if you force creditors to accept this debt swap, it raises questions as to how voluntary this is. And of course, many say that in that event, the credit default swap, the insurance against Greek debt, will be activated. And this, of course, opens up the floodgates to many more problems in the financial market.
OK, Natalie, good to talk to you. Thank you very much. Natalie Savarakis in Athens. We should give the last word on this, Stuart, to Nouriel Roubini, the man who, of course, predicted the 2007 crash, and partly because of what Natalie was saying there, how voluntary this agreement will be, this bond swap. He thinks it's all going to be curtains for this country. One of his most recent tweets, he says, whatever happens in Greece, whether they get a voluntary bond swap, whether it's involuntary, there will be a credit event. That's shorthand for a default in Greece.
Will he be right? Owen will be the person to tell you if and when it happens. Now, the flamboyant pirate at the centre of the latest battle for the internet. Kim Dotcom shot to infamy as founder of the file-sharing site Mega Upload. But the German entrepreneur now facing extradition from New Zealand to the US. Authorities there are taking the lead on a new crackdown against what they call criminals making millions by ripping off TV and film copyright.
big-name celebrity endorsements, 50 million visitors a day, 180 million registered users. Once the 13th most visited site on the internet, its homepage now looks like this, shut down by the FBI. The site's founder, Kim.com, has been arrested and his assets seized. He's accused of making $175 million off media piracy. His website, megaupload.com, is a web hosting tool. Users can post files too big to email in an online locker and then share them with friends. Authorities allege the site is filled with movies and TV shows in violation of a host of copyright laws, which has cost rights holders $500 million in lost revenue.
It is basic theft. There is no ands, ifs or buts about it. It's theft.
Since early 2000, authorities have been cracking down on illegal file-sharing sites. In May 2002, media giant Bertelsmann turned Napster into a legal platform for music sharing. Other sites haven't been so lucky. Pirate Bay in Sweden was shut down in May 2006. Media analysts say the problem comes down to money.
This is all about controlling the content and the creativity and maximizing the money. Hollywood and the music industry aren't willing to move on.
In the wake of the arrest, several websites, including Uploaded.to and FileSonic, have disabled their file-sharing services.
Okay, let's pick up on a couple more of the day's business stories for you now. The co-founders of struggling BlackBerry maker RIM have both quit as co-chairman and co-chief executives. Mike Lazaridis and Jim Balsillie said they needed to pass the baton to new CEO Torsten Hines, but they say they will remain on the board. Their decision follows the worst period in the Canadian firm's history that has seen its share price collapse as BlackBerry steadily loses market share to Apple.
And IKEA is withholding any further expansion into India. The Swedish furniture maker's chief executive told the Financial Times he's concerned about a new Indian law requiring single-brand retailers to source a third of their goods locally. The law was passed earlier this month to ease Indian fears over the opening of the retail sector to foreign companies. And in fact, we're going to stay in India for now. It's the home of architectural wonders, of course, like the Taj Mahal. Many ancient buildings falling down with refurbishment just too expensive for the government to fund. One solution, developers to take them on. But many are seeing potential profits getting tangled up in red tape.
India's Rajasthan state, where kings once ruled from their opulent palaces. More than 2.5 million tourists come here every year to catch a glimpse of this royal heritage. But these majestic beauties are slowly dying, neglected for decades.
These properties, many of them, are extremely maintenance heavy, and they need to be preserved and they need to be repaired and renovated regularly, and that's the only way to actually preserve them.
Thousands of these so-called Royal Nazul properties were taken over by the Rajasthan government after India became a republic in 1950. Since then, little has been done to preserve them. Authorities are now trying to lease them to hoteliers in the hope that they will be restored. The 19th century Tijara fort is the only property to be leased so far. Heritage hoteliers Amarnath and Francis Wagzia have signed a 60-year agreement and are converting the ruins to a 75-room hotel. But what looks like a great deal on paper has turned into a 9-year battle with bureaucracy.
Everything is offloaded on you. So we've, paid for the electricity, got it late. We bought land and drilled the water and done the piping. We bought land and built the access road. And then we are doing all the work. And they're still on our back saying, why is it not happening on time? Why is it not happening? But
While the rental on these majestic forts is affordable, red tape and poor infrastructure are scaring investors away. Meanwhile, this unique part of India's heritage is fading out of existence.
Absolutely beautiful, doesn't it? Owen, thank you very much. That's Owen with the business news. He's back at hour or so's time here on France 24. Claire, though, she's going to be here a little bit quicker than that. A few minutes' time for the latest headlines. Join her if you can.
Nothing to wear? What a nightmare. Don't panic. Don't get upset. Be cool. The new haute couture collections are here. Our guide to all the latest trends in high fashion to be your most fashionable. Haute couture. From January 24th to 27th, 10:50 a.m. Paris time on France 24.